Christian is a senior advisor with McGuire Woods LLP, and he has acquired two businesses and sold one. So he knows what you are going through as searchers, which is so important. So, welcome, Christian. Thank you for doing this.
Thank you so much. Can you hear me okay?
I can hear you okay. Sounds
Good.
great.
Thank you. Okay. Let's see. I'm going to share my screen. Okay. So first of all, thank you, Karen, for having me. This is wonderful. I'm so excited about Searchfunder and all the good you are doing to help searchers and acquisition entrepreneurs in the world. So I'm delighted to be able to help. I'm going to just start with a quick background on myself. I have a very unique role as a non-lawyer at a large national law firm, and my job is to find clients. My title is senior advisor. They don't put sales on people's titles in big law firms, and it's just not that common of a role. So I've been very fortunate to find a niche in our private equity group, and that's where I started. And my whole purpose is to find clients specifically in our private equity group. The types of clients that I look for are clients that buy companies valued between $20 million and $200 million. I'm going to talk a little bit about kind of who we are as a law firm in a moment, but I'll also just mention, as Karen said, I've been very fortunate to be able to acquire two businesses and sell one. The first one was a company that's a small software company. My wife was the CEO of the business. We were the majority equity in the business, and sorry, we were not. We were a large piece of the equity, but not all of the equity, and we raised outside capital to do that deal. And in the second company is a company called GridHawk. The website is gridhawk.com. My wife and I are the largest shareholders, and I'm on the board of that business, and I was very active in getting that deal sourced and closed. And GridHawk is a utility services business with 210 employees based in Indiana. Okay, so I'm going to jump into this presentation. And for anybody who's raising capital as an independent sponsor, as a self-funded searcher, the thing that you're looking for, I want to focus in on what happens at the end. At the end of the capital raise process, the investor is saying, I'm in for a minimum of X and a maximum of Y. It's important for you to think of your investors and to try to get them to commit to a minimum and a maximum as opposed to a specific number for reasons that I will get into shortly. And we're getting to this point where the investor has this, it tells you this. Let's just think about what are the steps that have happened. First of all, you've contacted them in some way. You've developed a conversation and a dialogue with them. They have come to believe that you are legitimate and strong, that they like you personally, and also that they like the deal that you found. And not only that, they also think that you are the right person to be able to operate and grow this business toward a successful exit in the future. So that's the goal. That's the end goal. And I'm talking when I say beginning at the end, I'm just talking about specifically this capital raise process. Obviously, you're just beginning the process of running the company. So I'm going to share a few highlights just to share some bona fides from McGuire Woods. In 2020, we closed 353 M&A transactions, large aggregate deal value. The deals that we do are much larger than typical searcher deals. I'll talk a little bit about the types of searchers that we work with. The short answer is that if you are a self-funded searcher and you want help raising equity, we can often help if the enterprise value is north of 10 or 15 million. You need at least 3 to 5 million of equity, and you're planning to work with a leading or a top law firm or a top 100 firm. It's harder for us to work with folks that need less than 3 million, that need average check sizes of $100,000. Most of our clients are looking to write larger checks or the people in our ecosystem. A little bit more about our rankings. We're a top national and international law firm for M&A transactions. These are tailored to more middle market private equity funds. And I'm going to just mention a little bit about the way we see our ecosystem. In our ecosystem, we work extensively with independent sponsors, and we think of self-funded searchers as very similar to independent sponsors. And the key difference between an independent sponsor and a self-funded searcher is somebody that is running the company versus somebody that's acting as a financial investor and not running the company. An independent sponsor is a financial investor, not going to run the business. A searcher is going to run the business. But as you can see, we think of ourselves as being part of an ecosystem, and it's important for you as a self-funded searcher to recognize that you will become part of an ecosystem as well, and that you can lean on other nodes in this ecosystem for introductions to potential investors, for ideas about questions that you may have, for sources of value, for referrals to others, and so forth. I started our independent sponsor initiative. Every place where we have a red dot is where we have one of our networking groups. Don't have to spend a lot of time here, but I work extensively with independent sponsors and self-funded searchers around the country. And the sales pitch that we make to our clients are that, number one, we're a source of deal opportunities. And number two, we try to be a source of capital. And number three, we try to be a source of market intelligence. And in 2019, 2020 was a little bit of an outlier here, but we made over 4,000 connections between investors and people who are raising capital for a deal. Okay, so I'm just going to dive into the meat of this a little bit. When I am sharing an opportunity with a potential investor, what I want is to have that. I want to be able to summarize my opportunity in a way that is very, very easy for a prospective investor to understand. I want them to be able to. To take a look at who I am, understand where I've come from, and so forth. And so I put together a list of bullet points that I share, and I do this almost every day. We see almost at least one deal a day from investors and others, self-funded searchers and independent sponsors, and private equity funds that are raising capital or co-investment capital. We see these all the time. So I highly recommend that you screenshot these next two slides and use this for your own outreach. So the idea is that you can send an email to an investor that says, investor first name, comma, I received your name from this person, and I would love to have you consider coming into this deal that I'm leading as a searcher. Here are some bullet points about the opportunity. Please let me know if you'd like to schedule a time to discuss it further. So these are the two bullet points, or the 2 pages of bullets that I've just put in. And I've really just taken a recent deal that we did and changed some key details to make it anonymous. But as you can see, going back to the first page, it's pretty straightforward. It's very important to lead with the lead. What are the core details that you need to present? I think it's of critical importance that you keep it easy to read. I really love using DocSend for this, and I really love providing people in a teaser something that's non-confidential that allows them to not have to see the name of not of the target company or any confidential information that you would not want them to know. Let me just pause here, and I'm gonna see if I don't see any questions that have come up. So if there are any questions.
Christian, one big question has come up, and that is if you would be willing to share the slides after the session. I can email them to the registrants and also post it on the landing page for the event. I'm a little winded because I inadvertently did not plug in my laptop, so I was afraid of getting disconnected, but that is the question.
No, yeah. And actually, I just saw some of these questions. So, and I will also address quickly this question from Buzz Park. Could you discuss if it is important to establish relationships with capital sources before actually having a deal in process? Is it important or not that important? That's a great question. I'm going to address that question. I don't know, let's see. I will definitely share the slides. Okay, so let me just address Buzz's question. So the answer is it's important to know that there are investors who actually have an intention to transact, as opposed to investors that you think may have money, and that they're just going to do this deal because it's a good deal, right? So the intention to transact is of critical importance, and I'm going to talk a little bit about how I get to that knowledge with the investor beforehand. I recently had a situation where a good friend of mine had an opportunity, kind of an equity hold of $1.4 million. And it was a really attractive opportunity. And I was able to introduce him to a few investors. And I actually came in as an investor myself in that deal, and raised all the capital that we needed in less than a week. And so part of it is knowing people who have the intention to deploy capital. But my argument is that a bigger part of it is to have an attractive opportunity that is ready to raise capital. So the short answer, that was a long answer. The short answer to this question is, it is okay to not have your investors totally lined up before you have a deal that's signed up under LOI. Okay, so let's continue. Okay, so as a salesperson at a large international law firm, I've been very fortunate to come up with an approach to selling that I call the easy to buy, the Christian Berger easy to buy sales approach. And I'm just going to quickly go through it here. I use a 3-step sales process. And for you as a searcher, raising capital, the end, as I talked about in this sales process, is the investor telling you, I'm in for this amount. And ideally, you want them to tell you, I'm in for between 100,000, my minimum is 100, my maximum is 250. That's extraordinarily important and valuable to have that information, and it allows you to sleep better at night and to have more certainty about how much capital you actually need for a transaction. It hurts you to say, yeah, I might invest, but I'm not going to tell you what my minimum or maximum would be. In the prospecting phase, let's see, I'm going to go through a little bit about each one of these steps. So the prospecting phase of capital raising has to do with finding what I call qualified pitch meetings, generating qualified pitch meetings. A qualified pitch meeting has three key elements. Number one, the person that you are talking to, in this case, your potential investor, is someone who you believe has an appetite for the type of investment that you're offering. Number two, you know that they are the decision maker. In other words, you're not giving a sales pitch to that person's wife or husband, or you're not giving a sales pitch to that person's associate or subordinate. You're not giving a pitch to that person's secretary. You're talking to the decision maker or to the person who is expressly mandated to source this type of capital. So number two, the person is expecting to hear a sales pitch from you on this particular opportunity. And number three, you know they have a need. So I'll cover these one more time again. So a qualified pitch meeting has three elements. First, the prospect knows that you're going to give them a sales pitch. Second, you know that they have an appetite for the type of opportunity that you're sharing. And third, you know they have a need, they are the buyer, and I'll remember the third one in a minute. Let's see if
Was it that they're the right person?
Yeah, that you're talking to the actual decision maker.
Right.
Okay, thank you so much, Karen. Okay, so in the capital raising process, I really like using an email approach like the one that I described. Hey, I have a deal, it's under exclusivity, I'm raising capital. I have 30 days to raise this capital, or I have 45 days to raise this capital. Let me know if you'd be interested in having a conversation with me. Or even better, I'm doing a call to answer investor questions at this time and this time on this day or this day. Okay. Oh, here we go. The prospect is expecting a pitch. The prospect is the buyer, and we believe that they have a need. Okay. So
I have a question about that need part. Is that just a different way of saying that they need to deploy the capital? They actually are desirous of doing that as part of their model.
Yeah, the way to think about it is, let's say you know somebody who's a billionaire, so they have plenty of capital. That does not mean that they're at all interested in your deal. Or let's just say that you know somebody who's a really active investor, but all they look at are angel deals in seed stage software as a service companies. That may or may not, they may not have an appetite for this type of deal. Or you know somebody who owns a lot of rental homes. Maybe they own 200 rental homes and they're super wealthy. But if that's all they do, then they're not going to have an appetite for this type of investment. So ideally, what you want is to find somebody who has an appetite for the type of deal that you have, which is you need a $100,000 to $1 million equity check to support a buyout through the search model, the search fund model. Okay, and I'll just mention one more thing about this. The more strict you are about what is a qualified pitch meeting, the fewer qualified pitch meetings you'll have. So if you only want investors who exclusively invest in searchers based in your city, the number of potential investors that you will find is much, much smaller. But if you open it up a little bit, maybe the quality of the qualified pitch meetings will go down a little bit, but you'll have more qualified pitch meetings. Okay. So with pitching, ultimately for you as the searcher, the goal of pitching is to figure out, number one, is this person qualified? You know, and number two, do they actually have, when I say achieving dialogue, what I mean is you can ask any question that you feel is appropriate to the investor, and they answer honestly. So if you Buzz, you're pitching an investor, for example, and you say, so how many deals do you try to do per year? Or how much capital do you hope to invest in a given year? If they say, well, we don't disclose that information, then you might have to ask some more questions to know if this person is actually qualified to be an investor, or to even know if you want them as an investor in your deal. Because your goal needs to be not only to close the capital, to raise all the capital that you need, but also to have investors that you like, that are not going to be hounding you every week for questions that distract you from your primary purpose of operating the business and growing. Okay, let me just pause here. I think we've seen another question come up.
Yeah, the question, and Buzz is doing great. Thank you for these great questions, Buzz. Buzz asked for clarification regarding your statement about in for a minimum and maximum. Are you saying that we as a searcher need to express what our min max investment is, or that we need to have those numbers from the investor we're pitching to?
Yeah, no problem. It's great. It's a great question. It behooves you to know from the investor what is the minimum investment that they would make. So let's say that you have a need for $5 million of capital, or let's keep it simple. Let's say it's $1 million of capital, and you have 10 investors, and each investor says, I would do this and I would make this investment, but only if I can invest $100,000. So in that case, 10 investors each putting in $100,000 is fine. But if one investor says, hey, look, I just had this thing happen and the most I can put in is 50. Now you're short $50,000. So you need to know from the investor what is their minimum and max. So you need to be able to ask that. That's a key part of this achieving dialogue. Okay, I see another question. Karen, will you read this to us?
Yes, and Cervantes asks, where do you find and meet these investors at the first place? Is this before you do the formal pitch meeting? I guess, can you tell us a little bit more about the timing? Is like, do you have to have like a cup of coffee with the person before you can have the pitch, or can you just go straight into it?
I would highly recommend using Searchfunder, first of all. And if you have a good team around you, when you have a live deal posted on Searchfunder, you will find people who have an immediate active desire to invest in deals like the one that you have. Assuming the deal that you have is attractive, or is at least as attractive as other deals that are getting funded, you're going to find investors in the Searchfunder community. It's truly an extraordinary place. I highly recommend it. And great, yeah.
We have and I want to thank you for saying that. You've made my whole day, Christian. We have somebody with their hand raised. So Kunai, if you could unmute and ask your question. And I may have read your name wrong. And as I said in the chat, I will mispronounce anybody's name if given the opportunity.
Yeah, no worries. It's Kunal. But anyways, thank you so much, Christian, for coming. Just, I may be jumping the gun here, but what are sort of like market rate expectations in terms of IRR for investors these days? Say I'm raising $3 million on a $10 million transaction, 30% down, just like a hypothetical situation.
Yeah. It's going to be dependent on the investor. And it's going to be dependent on three things. In my mind, there's three parts of the investment itself, and then there's also a question about you as the searcher. And I'll just take a moment to answer this question because I think it's of critical importance. The guidance that I provide to people that I personally help to raise capital is that, number one, the minimum MOIC you should be targeting is a 3 times MOIC within 5 years for the investor. That's net of your fees, which is a very strong return. Number two, there should be upside above that base case scenario. There should be an upside case where if you really knock it out of the park, you provide a return better than that. Number three, there should be some downside protection. And the search fund model is beautiful. The self-funded search model can be helpful because there is a little bit of downside protection in the sense that most searchers are using a personal guarantee. They're putting in a personal guarantee. That's going to provide a semblance of downside protection, but it's not actual downside protection because most searchers are actually, are not going to have the resources to be able to provide, real downside protection. But when I say downside protection, I mean an MOIC of no less than 1x within 5 years. So you're not going to lose your principal. How can you sort of help the investor know that your deal is a good deal, or that the deal has downside protection? There's ways to do it, and I've already proposed this to Karen that I can do a follow-up call to talk about tips and tricks for structuring a transaction so that you can sort of maximize your downside protection and your upside opportunity in the deal. And this doesn't talk about what kinds of economics you can negotiate for yourself as the searcher. But that's basic guidance that I think is going to allow you to find investors. And just to clarify what I mean by 1x for downside protection. So I'm talking about multiple invested cash. So if in the deal, the invested cash is $1 million, what is the mechanism by which you will return at least 1x invested cash at the end of that transaction? Karen, would you mind just reading this next question for us?
Yes, and Alan asks in the chat, as a self-funded searcher, how do you get sellers comfortable going under LOI when the self-funded searcher does not have the same financial backing as, say, a traditional searcher? Do you see self-funded searchers reaching out to capital sources pre-LOI to receive letters of interest or some other form of assurance that they could provide the seller?
Yeah, those are really good questions. You can, there's two very simple things that you can do. One is with your LOI, and again, I'm not a lawyer, so this is not legal advice, and you're going to have to get a lawyer to give you this advice or to confirm whether this would work for you. But in the letter of intent, you can, if you feel like it's absolutely necessary. I don't necessarily recommend doing this, but you can provide the seller some assurance that you will be able to close the transaction by putting into the LOI that you will furnish a comfort letter from an equity partner within a certain number of days of signing the LOI. It's not great, but it does help. You can also provide as much information as you want about your own about your own sort of personal financial wherewithal, but more importantly, what a bank has told you. So if you have a lender that has told you that they will provide financing for a certain type of transaction, then you can do that as well. This is a common chicken and the egg situation, and one piece of advice that I give to searchers, and this is kind of going to tease a little bit what I would talk about in a subsequent presentation, is don't be afraid to pay to offer to be pretty open with your seller about who you are and what you're trying to accomplish, and what a good deal looks like for you, because they're an entrepreneur. They know that everybody has a need to earn an income for themselves. And in my first transaction, the company that I bought with my wife, software company, we made an offer that was slightly above market purchase price for the software business, and because we made an above market offer, we were able to negotiate very attractive seller financing terms that included an earnout, included seller debt. It also included a contract, an employment, actually a consulting agreement with the seller that ended up working very, very similarly to a seller note. So anyway, without going into too much detail, I'll just pause there, and I'll get through the rest of this presentation. So don't be a bad guy. One of the key messages of pitching is that, and here's a classic situation for anybody who's seen any good guy versus bad guy movies. It happens in the old James Bond movies all the time. It happened in this movie, The Incredibles, where the good guy gets caught by the bad guy. In this case, the bad guy is this young kid named Syndrome, who's taking over the world. And Mr. Incredible was caught in Syndrome's trap, and Syndrome is monologuing. He's talking basically without ending, and Mr. Incredible is almost able to sneak away. And Syndrome says, "Oh, you got me monologuing. I shouldn't have done that." As a seller, and in this case, if you were raising capital, you are a seller. You need the sale that you are making is for investment capital. If you talk too much, you are going to prevent yourself from achieving dialogue. So I'll talk a little bit more about this in a moment. So pitching, I did a quick copy and paste here. Your sales pitch. So remember, there's a 3-step sales process: prospecting, pitching, and closing. Your prospecting is anything that gets you a meeting with a potential investor. Your pitch is the actual meeting with the investor, where you know that they have a need, whether you're talking to the person who's going to be the buyer, and you know that they're expecting to hear a sales pitch from you. My recommendation, and it's not written here, and I highly recommend you write this down, is that you use the following format for the sales pitch. Number 1, you give a mini monologue. Here's who I am. Here's how I found this deal. Or here's who I am. Here's why I decided to be a searcher. Here's how I've been searching. Here's how I found this deal. Here's why I like this deal. And here's the type of investor I'm looking for. Put all that into a 3-minute monologue, and then be done, and make it impressive. Make it so impressive, hopefully, that they're going to say, "Wow, let me tell you about myself." And they're going to talk for 3 minutes. Now you achieve the dialogue portion. That dialogue portion of the meeting is where they ask their questions and you ask your questions. You will not have, it doesn't count as a prospect, as a strong prospect, if you don't know how much they might invest and what they're going to need to decide that they are going to invest in the deal. Like, who do you need to talk to if you're going to decide on this deal? Are you looking at other deals? What kinds of returns are you looking for? How do you look at downside protection? What would you like to know about me that I may not have answered? Those are some of the questions that you're going to have to ask. So I highly recommend mini monologue plus that you give plus mini monologue that they give, followed by a dialogue. Okay. Again, I copied and pasted this off my sales training that I give to our lawyers. But the idea with closing the investor is, if you start raising capital after you have the deal signed up under LOI, and hopefully after you've had some diligence completed, that either you've done, maybe you've done some preliminary financial diligence yourself, and you've confirmed that the financials are what the seller has said that they are, that they're actually reasonably accurate. Now you can start raising capital confidently, knowing that you have a great opportunity. Closing is doing whatever you can to get those people to say, I'm in for 150,000 to 250, or 200 to $1 million, or whatever your target is going to be. Okay. So with that said, we're at 11:45. I'm happy to answer questions, go back to any of these pieces. I know I've kind of gone through this a little bit quickly, but why don't I pause there and turn it over to you, Karen.
So I have a question for you, because a lot of what you have put here is very analogous to what I went through last year when I ran for office. You having the 3-minute basic pitch, having prepared questions, really understanding kind of what I was basically selling to the prospective donor or voter or whatever. The big thing on the political side, which I discovered in talking to folks who are donors, was making the ask. Like, it was almost a requirement. Like, they would happily listen to my pitch and let me walk away unless I asked them for the money. And typically a specific amount of money. So I was always kind of guessing about, okay, is this person a $500 ask or is it a $50 ask? I don't know, but I'd have to guess during the conversation. In these pitches with investors, are they in a similar vein looking for the ask, and should you be specific about the dollar amount that you're asking for?
Yes, the answer is yes. And I highly recommend leading with the lead. This is the lead. Investor, so imagine you're sending an email, or imagine you've posted something on Searchfunder, and the post says, new deal just signed under exclusivity, looking to connect with new investors. So that's a headline, and in the description, or in the summary of your post, in the body of your post, you write, I've been running my own self-funded search for 6 months or 12 months or whatever period of time, and I just got a deal under LOI that I'm really excited about. And I'll talk about how to do this other than Searchfunder in a moment. So let me know if you'd like to talk. Here's some details about the opportunity. And then I would put in your 6 bullet points that I provided earlier, and have those bullet points be really, really nice, easy to read, have a link to a DocSend teaser. In that opening ask, I would say something like, you're going to say how much capital you need in order to close the transaction. So you're going to say something along the lines of, raising $1 million or raising $5 million or $10 million of equity to support this transaction. And in fact, let me go back, if I may, to this screen. So in this case, raising $3 to $5 million, minimum 100K commitment for $20 million acquisition of main course. Total sources also include these other types of capital that I have in the capital structure, and then you're also going to give these other. So when you have a conversation with this, if somebody says yes, I'd like to talk to you, you can reasonably believe that if they found you on Searchfunder, or if they've read an email from you that says that contains these bullet points, you can reasonably assume that they will have an appetite for a minimum of $100,000 check. So that's why I highly recommend leading with the lead. Okay, so good ways to find investors. This is a classic challenge of selling, and a lot of people who are searchers are not necessarily longtime salespeople. I'm a longtime salesperson, and in every sales job I've ever had, my mission in life was to turn over every single rock I could find in order to make sales. And for me, that was, in the early days, that was opening a phone book if I had to, or sending cold emails, or soliciting people for qualified pitch meetings, searching for them wherever I could find them. So I'm going to go back here, and if you had an email that said something along the lines of investor first name, comma, I'm a self-funded searcher and recently signed up my first deal, or you could say, am planning to and expect to be closing or to signing up a new deal very soon, period. Here are some bullet points about the opportunity, period. I would love to have an introduction to any investors who you think might be interested in this opportunity, period. Whatever your personal ecosystem looks like, you can solicit all of those people in that ecosystem for introductions. And your personal network on LinkedIn will also include individuals who may have an appetite for an equity check of $100,000 to $500,000, or $50,000, or even 25 if you want to really syndicate it very broadly. Hopefully that answers some of these questions.
And I think that's also very much analogous to my political run, where you're kind of going through your entire contact list and trying to figure out who you know who may know somebody who might be interested, if you're going outside of the search fund community. Because once you go outside of the search fund community, you also have to do that educational component about what a search fund is, whether that person, as you talked about, is an angel investor or whatever. If they're investing in something else, you still have to do that, that educational piece. One thing that I have a question about on your ecosystem that has come up in our meetups is women and BIPOC investors. And more of our searchers are looking to have diverse boards, are looking to have diverse investors, and they're struggling to find folks because of the nature of their networks. Do you have any suggestions for that?
Yeah, I'm not familiar with that term. You said BIPOC?
Yeah, sorry, Black, Indigenous, people of color. Or
Okay.
Yeah.
Got it. Yeah, so I do think that it is the first and foremost, single most important thing is to be able to raise the capital. If you sign an LOI with a seller and then you can't raise the capital to close the transaction, it will be you're going to lose that opportunity, and you're going to lose credibility with other investors that may have been willing to come in alongside that deal. What are the incentives that you can offer as a searcher to your community for this particular deal that you're trying to do? Different community members will respond to different incentives. The most important incentive is that you will provide a very attractive return, and that this return will be used to build a small business that will support an employee base that has a mission that is hopefully sufficiently noble and interesting that the investor can feel good about participating. But there are other incentives as well. You can offer an incentive like, hey, I'm also looking for board seats, or I'm looking for advisors, or I'm putting together my advisory board, if you want to call it that. Or I'm looking for my advisory team, the lawyers, or the law firm, the accounting firm, and any other key outside firm that I may use. I can offer that as a potential incentive or reward for you hearing my pitch. So my advice is when you're out there starting, you develop your 3-minute opening monologue, and you give that to both referral partners, people who can refer you to investors, and also you give it to investors. And when you enter into the dialogue portion of the meeting, you can find out, is this person an investor? How much of an investor are they? If they're not an investor, who do they know who might be an investor? What is their value to me? And hopefully that will help you kind of triangulate where you are in your hunt for capital.
So I'm sure you've probably had an opportunity to hear many, many monologues. Are there, I guess, any sort of don'ts, like absolute don'ts? I think that you talked about over monologuing. Are there any other don'ts?
The simplest monologue is 1 minute about myself, 1 minute about my firm, and 1 minute about my ideal client that I often talk about. Like this is the structure that I often think about. The don'ts, the things that you're trying to achieve are in the monologue is you're trying to establish sufficient credibility that they feel as though you are worth talking to, and you're also trying to avoid a situation where after the monologue begins, they ask a question that will really take the wind out of your sails. So an example of that type of question would be if they were to say, wait a second, you're doing this to make money? Like if they didn't realize that you're running a search in order to generate wealth for yourself, then you will have made a mistake, a big mistake. Or if they were to say something like, wait a second, I only invest in healthcare businesses in the Northeast, and you're buying a distribution business in the Southwest. Is that true? That you will have made a big mistake if they ask a question like that. So I try to have my opening monologue be sufficiently comprehensive that they understand the basics, and that their questions are more clarification questions, trying to get to know me and the virtues of investing in me, as opposed to clarifying questions that are like deal breaker type questions. Hopefully that helps.
Thank you. And we have a question from Kunal in the, actually, he's raised his hand. So if you could unmute and ask your question, go ahead.
Yes, just a follow-up question to the question I had earlier. A lot of self-funded searchers look at companies that are not necessarily the most high growth, like a SaaS business or like maybe some sort of high growing healthcare business. Like some of the businesses that I'm looking at are companies that are low growth, kind of stable, but you can nab them at very low and attractive multiples. So, when you describe that 3x multiple on invested capital for the investors in 5 years, it's very, very dilutive. Is there any way that I can, possibly incentivize my investors so they're so excited about the deal, but still maintain that maybe 3x return, maybe by giving like higher dividends during that 5-year time period, and then maybe like a lower multiple when I exit the business in terms of the return on capital, or some sort of structure you would probably suggest or recommend for someone looking at a high cash flow business at a low multiple that's kind of slow growing?
Yeah, my advice on that is that it all has to do with the risk reward profile of the opportunity. And so at each investor you talk to will have a highly different appetite in terms of risk and reward. Angel investors will make 20 investments with the expectation that a lot of them will fail and one of them will cover the losses and make money for the ones that lost. Real estate investors or people who invest exclusively in credit, private credit, for example, they don't want a single loser in their portfolio whatsoever. And so the answer is yes, you can find investors who will invest in your capital. But the way that I think about it is your deal needs to look at least as good as another deal that is actually getting funded. So hopefully that helps.
Yes, that did. Thank you so much.
So we are at the end of the hour. I thank you, Christian, so much for your discussion. It's really, really helpful. I think the way that you've laid out the framework is going to be invaluable for our searchers.